Bitcoin's RS, I just hit 27. Ethereum is sitting at its lowest Fibonacci level in months, and we're heading into a weekly close that could define how the next 2 weeks trade. If you're in this market right now, you need to watch this before Monday. This video is for educational and entertainment purposes only. Nothing here is financial advice. Always do your own research before investing. Let's set the stage, because context is everything heading into a weekly close. The overall picture is cautious and volatile. This isn't a market that's crashing in panic, but it's also not one that's recovering with conviction. We're seeing coordinated weakness across Bitcoin and Ethereum, while gold is quietly holding its ground and reminding us that institutional money hasn't left the building. It's just parked somewhere safer. Bitcoin dominance continues to rise, which means altcoins are bleeding relative to BTC. Capital isn't rotating into the broader market. It's either sitting in Bitcoin or exiting crypto entirely. That's the macro environment we're dealing with this week. The weekly close in the next few hours is genuinely important. It will either confirm a period of further weakness or open the door for a recovery bounce heading into the new week. Let's break down each asset, starting with Bitcoin. And the weekly chart is telling a clear story right now. Selling pressure increased heading into this weekly close, and the price has pulled back all the way to the 0.618 Fibonacci retracement level. For those unfamiliar, the 0.618 is one of the most watched levels in technical analysis. It's often the line between a healthy correction and a deeper structural breakdown. We're sitting right on it. The RSI is at 27. That's approaching oversold territory on the weekly timeframe. And weekly RS is don't lie. When you see a reading this low on a higher time frame, it typically means one of two things. Either a relief bounce is building, or the selling pressure is so intense that even oversold conditions don't hold. Right now, we don't know which one this is. And that's exactly the problem. Support sits between $73,925 and $73,925. That's the zone bulls need to defend. Resistance above is between $76,031 and $76,031. Here's what the weekly close actually means. If Bitcoin closes below $74,000, new week starts on the back foot. Sellers remain in control and a retest of deeper support becomes the base case. If we get a close above $76,000, that changes the tone. Buyers have defended a key level, and short-term relief buying could push us back towards $79,000 to $80,000 in the early days of next week. Right now, the short-term trend is down. I'm not going to sugarcoat that. ETF flows are weak, risk appetite has dropped, and the chart structure isn't giving bulls much to work with. But a weekly RSI of 27 is not a number you ignore. The setup for a bounce is building, even if the trigger hasn't arrived yet. Ethereum's situation is, frankly, weaker than Bitcoin's right now, and that's saying something. ETH has retraced all the way to the 0.236 Fibonacci level on the weekly. That's not a minor pullback, that's a significant giveback of prior gains. The RSI is at 35, still in bearish territory with selling pressure ongoing. Support is at $1,938. That's the level that needs to hold. If it does, and we get stabilization, the first resistance to reclaim is $2,060, followed by $2,200 for any meaningful recovery narrative to form. The weekly close scenario here is straightforward. A close below $2,060 significantly increases the risk of a weak open next week, potentially testing that $1,938 support fast. The psychological $2,000 level sits right in the middle of that and will attract attention from both buyers and sellers. For Ethereum to matter again on the bullish side, it needs to reclaim $2,200 and hold it. That's not happening this week. So for now, ETH is a watch, not an action. The fundamental picture confirms the technical weakness. Capital flow into Ethereum is low, the altcoin market continues to lose ground, and rising Bitcoin dominance is mechanically suppressing ETH's relative performance. Until that dominance trend reverses, ETH will keep underperforming. And then there's gold, which is doing something quietly important. While crypto sells off, gold is consolidating at the 0.5 Fibonacci level with an RSI of 42 and momentum still pointing upward. It's not flying, but it's stable, and stability matters when everything else is volatile. Support is at $4,430, resistance at $4,516. A weekly close above $4,516 would be a positive signal for gold heading into next week. A close below $4,430 would invite more selling, but even then, gold's broader structure remains stronger than crypto's right now. Why does this matter for crypto traders? Because gold's strength is a direct signal that safe haven demand is still elevated. Institutions aren't buying risk, they're buying protection. That macro backdrop is one of the primary reasons crypto is struggling to find a sustained bid right now. When gold cools off and risk appetite returns, that's typically when crypto gets its legs back. We're not there yet. Let's connect the dots with what's happening beneath the surface. ETF flows remain weak. We've seen net outflows from Bitcoin spot ETFs over the past week. And that matters because institutional flow data is one of the cleanest signals of smart money direction. Outflows mean that the players with the largest allocations are reducing exposure, not adding to it. That said, institutional interest hasn't vanished. Long-term on-chain data still shows accumulation behavior in the $73,000 to $76,000 range. And large wallet activity hasn't shown the kind of panic distribution you'd see at a genuine cycle top. This looks more like risk management than exit. For Ethereum, the on-chain picture is even more muted. Gas usage, DeFi activity, and staking inflows are all below recent averages. The network is quiet, and a quiet network with falling price is not a combination that attracts fresh capital. The broader macro backdrop, Fed rate uncertainty, ongoing geopolitical tension, and a strong dollar narrative continues to favor gold over risk assets. Until we get a clear signal from macro, a Fed pivot signal, improving ETF flows, or a liquidity injection, crypto is likely to remain in this choppy low conviction range. The market is waiting. The weekly close tonight will be the first vote on which direction it's weighting toward. So here's the summary. Bitcoin is at a critical weekly close level. Below $74,000, caution. Above $76,000, room to breathe. Ethereum is weaker and needs $2,200 back before it becomes interesting. Gold is the steady hand in a shaky room. My honest take? This is not a market for aggressive positioning. It's a market for patience, defined levels, and waiting for confirmation. The oversold RSI on Bitcoin tells me a bounce is coming, but bounces and downtrends are traps until proven otherwise. Watch the weekly close. Watch where we open Monday. Let the market show you what it wants to do. If this kind of breakdown helps you, hit subscribe. I do this every week, every major close, no hype. Like the video if you found it useful, and tell me in the comments, where do you think BTC closes this week? Stay sharp. See you on the other side of the weekly close.